afternoon, the market last year hits 4 million ounces as mining firms in the country repatriate realized almost $6 billion in revenue, but not all that money got back into the country.
Ghana saw an increase in production and export of traditional minerals, except for manganese. Gold production rose from 3.7 million ounces in 2022 to 4 million ounces in 2023, which represents an 8.3% increase.
Also coming up, government expected to sign an agreement with bilateral creditors on debt restructuring in Paris next week after accepting final changes made by Ghana to draft MOU. Plus, government records 19.4% oversubscription of treasury bills as demand for the short-term instruments rebound. My name is Darryl Kwao. Thanks for being with us. Details coming up. Thanks for staying with us, everyone. First up, total gold production in Ghana for last year reached 4 million ounces. The amount of money earned by members of the Ghana Chamber of Mines as export revenue also hit almost $6 billion. However, only $4.2 billion was repatriated to the country. Speaking at the annual general meeting of the Ghana Chamber of Mines, newly sworn-in President Michael Edema-Kafia noted that reviewing the country's tax laws can help attract more investments into the sector. Here's more.
Except for manganese, Ghana recorded an upturn in the production and exports of its traditional minerals in 2023. Gold production rose from 3.7 million ounces in 2022 to 4 million ounces in 2023. The increase was largely influenced by the growth of small-scale mining, while large-scale gold production dropped by a little over 6% to 2.9 million ounces in 2023. The small-scale subsector grew by over 70.6%. Again, mineral export receipts increased from $6.8 billion in 2022 to $7.8 billion in 2023, with gold accounting for $7.6 billion of the figure. President of the Ghana Chamber of Mines, Michael Edema-Kafia, spoke at the 96th Annual General Meeting of the Ghana Chamber of Mines.
Ghana saw an increase in production and export of traditional minerals, except for manganese. Gold production rose from 3.7 million ounces in 2022 to 4 million ounces in 2023, which represents an 8.3% increase.
In total, mining companies repatriated $4.2 billion to Ghana, representing a slight increase from the $4.1 billion repatriated in 2022.
Producing members realized $5.9 billion in mineral revenue in 2023 and repatriating $4.2 billion of that to Ghana. This included $2.7 billion, which was done through the commercial bank, and $1.5 billion to the Bank of Ghana.
On some of the challenges facing the sector, Mr. Kafia called for the review of some taxes to make the sector more attractive to foreign investment.
The chamber, at least in this period, was successful in getting some successes, but we continue to call for the removal of certain unjust levies and margins, which unnecessarily inflates costs and makes us less competitive than our peers in our sub-region.
On the issue of local content, Chief Executive of the Chamber, Suleiman Okone, is optimistic the operations of Petrochem Limited will be beneficial to the industry.
So we are talking about not just raw salt, but how to add value to salt and what that would mean for our industry and our country.
Newmont Ghana Gold Limited recorded the highest gold production, followed by Goldfields Ghana Limited, Newmont Golden Ridge Limited, and Anglo Gold Ashanti in that order.
Well, head of a corporate and investment bank in Stanbic Bank Ghana, Musa Abdullah, is urging mining entrepreneurs to seek partnerships to build the capacity necessary for executing large-scale projects. Abdullah emphasized that the mining sector is highly capital intensive and requires effective financing strategies for growth. He shared these insights with Joy Business during the West African Mining and Power Expo in Accra.
Access to financing is crucial for entrepreneurs in the mining and energy sectors to achieve their business goals, foster innovation, generate employment, and support economic growth in the region. At the West African Mining and Power Expo, the acting head of corporate and investment banking at Stanbic Bank Ghana, Musa Abdullah, encouraged entrepreneurs to focus on forming strategic partnerships to enhance their operations.
It's a very heavy capital-intensive area. And you will have heard me say that sometimes we need to have a right combination of capital, debt and equity in order to be able to drive our business forward. If you rely exclusively on debt, especially on commercial debt, it becomes very, very difficult to actually have low-cost funding. So it's important that entrepreneurs try to balance. And then also, more importantly, it's also important for entrepreneurs to seek partnerships. So if you see a contract that is too big for you, instead of drowning yourself in debt, it's important that you partner with other companies in your area to be able to execute it with patient capital. And once you do that, you realize that you build the capacity to be able to do future contracts easily.
Abdullah highlighted the importance of sustainable financing in Ghana.
We have to fund enterprises which also protect our environment, right? And we need to be very deliberate about it. And as a bank, we have chosen to ensure that our portfolio is net zero by 2050. And we are taking steps through our funding arrangements to ensure that we achieve a net zero impact by 2050. And we are partnering with all clients with that same energy on sustainability to be able to drive and protect our planet.
This year's conference was on the theme Driving Sustainable Investment Opportunities in West Africa's Mining Sector.
Now, the Bank of Ghana is asking savings and loans companies to deepen corporate governance practices to expand their operations. According to Governor of the Central Bank, Dr. Nes Addison, savings and loans companies should put measures in place to adapt to the new changes in the financial sector. Dr. Addison entreated the companies to collaborate with the banks and telecommunication companies for emerging technologies. He spoke at the 20th anniversary of Opportunity Savings and Loans Company.
Ghana called on the savings and loans industry to prioritize innovation, adaptation, and evolution to meet the changing needs of the sector. Dr. Addison said the central bank will continue to engage sector players in addressing challenges of the sector.
The Bank of Ghana remains fully committed to its supervisory role and will ensure that all financial institutions adhere to the regulatory requirements and guidelines to foster trust and confidence in the sector. The Bank of Ghana has been engaging with regulated entities regularly over governance and assurance functions in its quest to remain vigilant to ensure stability of the financial sector. Strong risk management, compliance with prudential rules, proper internal audit functions remain crucial to ensure that the regulated financial institutions operate soundly, safely, ethically, and within regulatory and legal boundaries.
Chief Executive Officer of Opportunity International Savings and Loans Company, Kwame Boateng, reiterated the company's commitment to continue to comply with the regulatory framework.
We are one of the few financial institutions in Ghana that combines both financial and non-financial services sustainably to create the desired client impact. Ladies and gentlemen, through our transformation agenda, we have since transformed the lives of 262 female street porters, Kayaye, and today we added another 30 in Pokwasi. These ladies used to live and labored in the markets and streets of Accra and Kumasi to make ends meet, and they've been taken through vocational skills and financial literacy training programs, and additionally, they have been provided with startup kits and capital to enable them to commence their trade. This initiative has not only empowered these ladies to break free from the cycle of poverty, but also contributed to the overall economic development of their communities. We were the first financial institution to introduce a dedicated loan product for the fiscally challenged in Ghana in 2013.
Opportunity International Savings and Loans Company said it will continue to engage its customers.
And you're watching the marketplace. Time now for your financial markets update. Government recorded a 19.4% oversubscription of its treasury bills as demand for the short-term instruments rebounded. This was captured in the latest auction results from the Bank of Ghana. Interest rates, however, remain stable. Let's give you some perspective. I'm joined on Zoom by a research lead at GCB Capital, Courage Boutique. Good afternoon to you, Courage. So what were the highlights of last Friday's auction?
Well, good afternoon, Daryl, and good afternoon to your listeners. So government went to market targeting a gross issuance of 4.4 billion to roll over some 4.17 billion and T-bill maturities that were falling due today. The auction was quite successful. Total bids of about 5.256 billion came in, and everything was accepted at rates largely unchanged from the previous week. You look at the dynamics, it's still dominated by the 91-day, which weeked in about 3.39 billion, almost 64%, if not 65% of the total bid received for the week. Compared to previous weeks, we saw a bit of a pickup in interest around the 182-day. And so T-bill 91-day share in the total demand came down to about 64% from the averagely 76% levels we've seen in recent weeks. And we've seen 182-day bill demand almost double from 608 million the preceding week to about some 1.68 billion, so more than doubled for the period. In terms of yield dynamics, 25.04 is what the 91-day printed, unchanged from the previous week. The 182 and 364-day came in at 26.94, 27.93, and those are 2 basis points higher than the previous week. Now, the general trend is showing that the rate of yield decline has largely slowed down, and it's almost reaching a stable point around the 25 to 27.9% levels. And year-to-date, yield compression is looking at 4.3% on a 91-day, 182-day looking like 5%, and then 364 about 4.6% yield compression year-to-date. So that's how the market looked last week. Still very much liquid. The higher demand or target was supposed to, the initial concern that may lead to under subscription and all that. But the market is still very much liquid and now upbeat about T-bills. So we're seeing again oversubscription to the tune of 19.4%.
Right. Compared to recent weeks, we've seen a rebound in demand for short-term securities. What does it say about investor sentiment?
Well, so sentiments are still favoring the short term of the market, and we know what the operating environment is. We know what people do not want to go out that long yet. And so it very much aligns with what sentiments have been prevailing all this while. I think the blip came when the CR directive mopped up some liquidity from the system, and banks are still adjusting to that. I'm aware some banks may be drawing down on their T-bill investment to meet their CR directives, while others are exploring other avenues really. But largely, a sense of balance is restored to the market now, where you could begin to see these high demands at every auction relative to the target.
All right. I just want to pick up on a few headlines because they have an impact on the financial markets as well. So we are told that the city's rate of depreciation is slowing significantly. What are you picking from your monitoring?
Well, yeah, that's true. And you will know that when the conversation on the media landscape seems to be slowing down, there is a bit of, I'll call it stability in the last few days. And also, the Bank of Ghana mentioned they have the reserves, and it appears they are stepping up their interventions on the market. And the communications around moral suasion and all of that seem to be gaining traction. I think there was also a clampdown on the forest bureaus to ensure that the right things are done and some supervision and all that. I believe all these will be playing a role. There was news of some World Bank 250 million for the financial sector dollars, which I believe, I'm not sure if it hit the account yet, but I believe that news alone has some positive impact. Later this month, date not set, but much later this month, it's expected the IMF will disburse some 360 million and all that. I think if you put all these bits and pieces together, it more or less provides some assurance, and that is why you are seeing things. Well, I wouldn't say we return to normalcy, but things are on a pause now. People are looking at the next move and then the next direction of the macros and how they behave, really. And I think it's important that T-bill decline is not very aggressive, because if people begin to feel they can get more from exchange rate, I mean, buying the dollar or the FX than doing T-bills, then you could see demand diverting to that side. So it's only expected that declining T-bill yields may be gradual, so that we can also sustain the FX outlook in that side, where people won't speculate for lower yields and go buy FX as an alternative. So I think they align, and let's see how the coming weeks and months unfold.
Also, we are expecting government to sign an agreement with our bilateral creditors sometime next week in Paris. Apparently, the government has they have accepted the changes made by the government of Ghana to the draft MOU, and so we are making headway there as well. Your thoughts?
Super positive. Well, I didn't think it was in doubt, though. But yeah, it's a good step. And I think I touched on it earlier. So all of these are providing some positive vibes on the market. The initial fear for many was that, will the 360 million come, given it's hinged on this MOU and all that. It looks like we're almost there in the home stretch now, and that's positive. It means the program is on track. It means the second review will be completed. And that gives some comfort to not only local investors, but also external investors. And I guess the Eurobond renegotiation or restructuring conversation can also progress on the back of that. And so it looks like things are taking shape gradually, only that we have to sustain the momentum. There are a few other reviews along the way. I think September or so, there is another review. It has its own set of benchmarks. And so we cannot get carried away at this point. We need to sustain the effort to ensure that the recovery that seemed to be on course is sustained to the very end.
Karit Buti, thank you so much. We said lead and economist with GCB Capital. I appreciate your time with us this afternoon. All right, and so we are going to still do some more from the financial markets. GCB Bank and Standard Chartered Bank will record gains on the Ghana Stock Exchange this week. This is based on the demand-supply dynamics of the market. Let's hear from Grace Munayan of Data Bank Research on how your stocks will fare this week.
Trading concluded positive note with three equities. The gainers were GCB Bank, SIC Insurance, and Ben's Oil Palm Plantation. However, New Gold ended the week as a sole decliner. Accordingly, the Ghana Stock Exchange Composite Index climbed 0.49% weekly, the year-to-date gain of 20.51%, whereas the Data Bank Stock Index gained 1.81% weekly, the year-to-date gain of 19.71%. Aggregate turnover totaled 5.8 million Ghana cedis from the exchange of 1.2 million shares across 22 counters. New Gold was the most active counter, accounting for 49% of the weekly turnover. This week, we expect GCB Bank and Standard Chartered Bank to record some gains based on demand and supply dynamics of the market. For Joy Business Reports, Grace Monanyun of Data Bank Research.
Well, away from that, to air travel now, the Ghana Airport Company Limited has assured of the company's readiness to facilitate operations and processes in working collaboratively with all agencies at the airport to ensure seamless working environment. According to the managing director of the airports company, Yvonne Opai, more international airline companies should leverage the Ghana aviation space and expand investments. She was speaking at the inaugural ITA Airways flight in Accra.
The Accra-Rome route is the only direct connection between Ghana and Italy, which is the first for the company in establishing a greater presence in West Africa, a key destination for both leisure and corporate traffic. Following the Accra route, a new flight from Rome, Fiumicino to Dakar will be inaugurated in July. Managing Director for the Ghana Airports Company Limited, Yvonne Nana Efri-Opari, urged other airlines to explore opportunities within the Ghanaian market.
Today, we witnessed the launch of a flight that will be operating from Rome, Italy to Accra, Ghana. ITA Airways becomes the 24th international airline to operate into Kotoka International Airport. I take this opportunity to welcome ITA Airways to Accra and extend a hearty congratulations to the ITA team. Distinguished ladies and gentlemen, the commencement of flight operations on the Accra-Rome route is a clear indication of the confidence in Ghana's aviation industry and significantly enhances our efforts at positioning Ghana as the preferred aviation hub and leader in airport business in West Africa. The introduction of this direct flight route signifies a new era of convenience and efficiency for travelers, both for business and leisure purposes.
Vice President of International Sales at ITA Airways, Pier Francesco Carino, said the company is here to stay.
With the brand new 321 Airbus Neo, new generation aircraft, with 3 classes, one business class with 12 seats full flat bed, then premium economy 12 seats and 141 seats in economy. It's designed by an architecture of mobility, Walter de Silva, with comfort and style, so it's really made in Italy style. And also the gastronomy on board of ITA Airways, it's designed by Michelin star chef Giancarlo Morelli. And the uniform of our crew are designed by Brunello Cucinelli. So ITA Airways, it's really an ambassador of Made in Italy.
Flights to and from Accra will be operated with the new Airbus A321neo, a new generation technological advanced aircraft. The A321neo is the largest aircraft in the Airbus A320neo family and offers exceptional range and performance.
The Africa Data Centers and Onyx Data Center have teamed up to expand their footprint in West Africa, starting with Ghana. The partnership will boost digital infrastructure, ensuring data stays within the borders of the country for better security and performance. Yes, more.
Africa Data Centers is a business of Cassava Technologies Group. The company has entered into a strategic collaboration with Onyx Data Center to bolster its presence in West Africa. The partnership marks a significant milestone in Africa Data Centers' mission to expand its data center footprint across the continent and provide world-class data center solutions to its customers. Speaking to journalists after signing the partnership deal, the regional executive for West Africa at Africa Data Centers, Dr. Krishna Ranganath, said the collaboration with Onyx Data Center will allow the two companies to leverage innovative technologies and sustainable practices.
Now we are getting into a partnership with Onyx, targeting the West African market and increasing the presence of Africa Data Centers. And this is a stepping stone of Africa Data Centers into Ghana market through the partnership with Onyx. Along with what I have Unique Cloud Africa Limited is one of the Pan-African cloud service provider. So it's the first baby in this in this marriage.
On this part, Yan Choi, Chief Executive Officer of Onyx Data Center, highlighted their commitment to top-notch quality, matching global tech standards.
We're able to offer a more ubiquitous service throughout the region. So, with servers, when you're putting servers in different locations, you want to be able to put your main server here, and you want to be able to put your backup server in a completely different location so that when things go wrong, that your services are still up. We've seen the situation here in Ghana where the submarine cables were all cut, okay? And a lot of services were not working. And that's because all the servers that a lot of services were providing were abroad.
With UniCloud Africa on board, the initiative is expected to support both large organizations and SMEs driving economic growth and digital transformation. The Chief Executive Officer of UniCloud Africa, Ladi Okuneye, is optimistic the collaboration will enable small and medium-sized enterprises to access advanced digital infrastructure.
As the first offspring of this relationship, we're extremely excited. UniCloud Africa is a Pan-African cloud services provider, and we deploy our services in state-of-the-art data centers across the continent. And one of the strategic partners that we are going into different markets in Africa with is Africa Data Centers. So upon our entry into the Ghanaian market, we thought it was benefiting for us to come in at a time that they were also establishing their strategic relationship.
And that's the marketplace. More news on our website, myjournalline.com/business. We are leaving you with a Money Lab episode for today.
Hi there. Thank you for joining us on today's edition of Money Lab. My name is Nana Santiamwako, Head of Consumer Experience at Enterprise Trustees. In our last episode, we discussed the Tier 2 pension scheme. Today, we will discuss the importance of consolidating your pension fund accounts. That is the mandatory Tier 2 or the voluntary Tier 3 Provident Fund from your previous corporate trustee to your current corporate trustee of your new employer. Consolidating your pension fund means that you transfer your accounts from your corporate trustee of the previous employer to the current corporate trustee. This will ensure that you have 1, easy access to your benefits at retirement. 2, you will enjoy one-stop processing of payment of your Tier 2 and Tier 3 pension benefits. 3,